Prospector News is media for educational purposes only and should not be construed as advice. We are not a certified financial analyst, licensed broker, or fund dealer, exempt market dealer, or hold a license to provide financial advice. We provide no legal opinion regarding accounting, tax, or law issues. Nothing in this podcast should be construed as investment advice or the solicitation to buy or sell stocks or commodities. All opinions expressed are those of the participants and should not be relied upon when making investment decisions. Those decisions should be made with the advice of a personal financial advisor. If you have enjoyed our podcast, please hit the like and share buttons and be sure to hit subscribe. This is Michael Fox, and this is the Prospector News Podcast. Joining me, I have Peter Krauth of the Silver Stock Investor, and we're going to talk about everything silver today. Hi, Peter. Welcome.
Hi, Mike. It's a pleasure to be here. Thank you so much.
Oh, not a problem. So, what caught my eye was a tweet from you a couple of days. Well, I saw it a couple of days ago. It might have been earlier than that, where you've called the bottom for the silver market at $18. Rather bold, given the times. How do you feel about that call today?
Well, it's always a cautious kind of thing. Obviously, that's I was making a prediction. This goes back to sort of mid-June or so. I was asked in an interview when I thought it would be time to buy silver, how low I thought it could go. And my call was around $18 because I said that's the all-in cost to produce silver, average all-in cost. You can get silver prices going lower. Obviously, there's nothing that would necessarily stop them from going lower. But I thought, a temporary spike, perhaps down to 17 or so, was possible. But in the $18 range, I felt there would be enough support and buying. And so from that level, it would make sense for anyone to either add to their positions or to initiate positions. I just felt like there'd be plenty of support at that price, and that the bias was to the upside from there. So that's the background for that.
Okay, well, that seems solid to some degree. At the end of the day, we tend to want to sell things for more than what we acquire them for. So if 18 is the all-in cost, you would think that there's going to be pressure for that to be the bottom. Now we have bounced off that $18. We were up a little over 20. We're recording this on Friday, August the 5th, and we have slid back below that $20 mark. Typically in the precious metals, the gold and the silver space, sometime right about now is when we see that seasonality factor kick in and we start to see the markets push the price of the metals back upwards again. This year, with the markets being kind of dismal, are we seeing that push upwards now, or is this just another dead cat bounce? What do you think?
Yeah, I think that odds are pretty good that we're going to see some upward bias in the price. It may not necessarily be, at least in the near term, as strong as it has been perhaps on the average seasonally, but I do think that we probably have seen the bottom. If you look at the average going back to anywhere from 1975 to last year, the average gains of silver on an annual basis, I actually talk about this in my book, and I have a chart that shows it. But the low tends to be right around the end of June, start of July. And so we were actually very close this year. If you look at, silver hitting a bottom, probably going back a couple of weeks. And so at this point, like I say, I think that odds are good. We've seen the bottom for this season, and that the bias is to the upside. And there are all sorts of factors, I guess, which we can get into that, might keep some pressure potentially on gains in silver. But again, I think that we're likely to see some decent rallying, at least from this point forward.
That would be good news. It's been kind of bleak to watch both the gold and the silver markets just kind of bounce around in oblivion for the last several months. I've always been a big fan of the seasonality of it, and generally you can kind of plan it like clockwork. But this year I've kind of been wondering about that. So you spoke of headwinds. Fed's raised rates 0.75% now at the last two meetings. They keep talking about being data dependent. This past week or so, it looked like the markets were suggesting that they might be looking at taking a pause. I've been on record as saying I don't think they're going to pause until they see weakness in the job market. Jobs figures came out today, and in the United States, they did almost 2 times what was expected. They were expecting some in the neighborhood of about 265,000 new jobs, and they came in with a let's rip the skin off this ball, 560,000. I think that's going to give the cause for the Fed to keep raising rates. A lot of people are saying 50 basis points, but it wouldn't surprise me if it's another 75 in the next meeting. Your thoughts?
Yeah, I mean, I agree that we could certainly see a decent increase in the next round by the Fed, but I'm cautious in the sense that I think that we are very likely getting close to the end of this cycle. Given how much rates have risen already, given the dent that we've seen in housing, which is a huge part of spending and contributor to the economy in terms of materials, in terms of jobs, in terms of all of the industries that surround that. When you think of home renovation, when you think of stores that sell all of the materials and repairs and so on, it really has a big impact. And so higher mortgage rates, we've already seen has really sort of impacted sales of homes and new construction. So I guess what I would say is that I'm cautious because I do also feel that we're in for at least another hike, but I guess, cognizant of the fact that it could turn very quickly. And I do think that, a recent survey I heard asking people what their intentions were for spending in terms of vacation this summer and so on, was that a lot of people were actually saying, in fact, much higher numbers than normal, that they were not planning to go anywhere, or if anything, stayed quite nearby, simply because of inflation, because things were just costing so much more and the affordability just was not there anymore. And so I think, at least besides the things I've mentioned anecdotally, there are some indications that people are feeling the pinch from considerable levels of inflation, ongoing inflation. And so I do think that the Fed is going to be data dependent. I agree they're going to be looking at employment numbers. That's going to be a big factor for them. But I do think things could turn quite quickly in terms of the health of the economy. And the amount that they've raised rates so far is going to take a little bit of time to kick in terms of slowing things down. But they did raise, I'm going to say in quotes, relatively aggressively and quickly. And so we could see a turnaround quite quickly as well in terms of the effects of that.
Yeah, the job numbers in Canada were down. We actually had that's 2 consecutive jobs numbers where we show decreases. Are we just ahead of the curve to what's going to come to the U.S., or is there that big of a disconnect between our economy and theirs now?
I would guess that we are probably just ahead of what's coming in the U.S. There are a couple of other things that I look at. One is the yield curve, and that is inverted, and it's continuing continuing to be inverted. That's a predictor of recession. And in the last 2 quarters in the US, minus 1.6% growth in Q1, and then minus 0.9% in Q2. And so that's the technical definition of a recession. The Fed's not prepared to, I guess, admit, if you want to call it that, yet that we're there. But I'd like to maybe remind everyone that it took them maybe 6 months at least, maybe a little bit longer, to finally admit that inflation wasn't transitory. So let's say the record is somewhat sketchy or blemished when it comes to that sort of thing. So
you know
let's
what?
see.
I have to tell you, my new favorite economic definitions come from the Fed. It isn't a recession until we say it is.
Right. Yeah, that sounds appropriate.
So if we're in agreement that the Fed's going to raise interest rates at least for one more cycle, be it 50 points or another 75, is that going to put more upward pressure on the U.S. dollar to go to new highs and create headwinds for everything? Or in your opinion, has the U.S. dollar peaked?
I mean, I guess I would say that there is always that potential to some extent, but the dollar had been rising so much for such a long time. I think that has pretty much played itself out. I'm tending to think that we have probably seen the peak. It's been a fair drop from there. It's been 4 points in the US dollar index from about 109, let's say, to currently somewhere around 105, 106. And I do think most of those gains have happened, and that the rise has pretty much been baked in terms of what the market's expecting from rate hikes from the Fed, which of course helped to push up the dollar. So for me, at least, we've just said we both agree. We think that there's a pretty good chance the Fed will increase rates at least one more time. So if we're right about that, you'd think, well, the dollar should still be holding up and should be at least somewhere close to some sort of a peak or of a high, and yet it has dialed back from there. And so that's why I tend to think the markets are forward looking. They see that odds are pretty high of some, but very limited likeliness of another rate increase by the Feds, or at least perhaps one more, and perhaps very little beyond that. And so I think that's getting, as I say, priced into the dollar. And so with that in mind, I think that we probably have seen the peak, in fact.
Given the statement, the Fed is going to be data dependent, you're anticipating what everyone's been calling the Fed pivot at some point. I've had this discussion with several others, and we refer to it as the point where they break something. What do you think will be the data that will cause the Fed to pivot? And then what do you expect to see from that pivot for the silver market?
So I think that very likely, because they've actually quoted it a few times in recent weeks, I think that the single most important data point for them is going to be jobs. And when they start to see employment levels drop off somewhat, I mean, I don't know the inner workings, and I'm sure they have their own sort of thresholds. But when they see the employment levels start to drop off enough for them, I think that'll be the turning point, where they will start to take their foot off the gas and allow things to coast. That would probably be the end of hikes. And I think that is going to be the signal. We may already have markets pricing in that sort of outcome from precious metals, which have in the last sort of week or two started to pick up since the last Fed rate hike a little over a week ago. And so again, the markets are forward looking. I think that they're starting to see that kind of scenario play out. And so that's what I think the Fed's going to look for. I think we're getting relatively close to that, perhaps a question of a few months. And I expect that what we've seen in terms of precious metals in the last couple of weeks, which looks like a bottoming out and a pretty healthy bounce, nothing wild, but a pretty healthy bounce nonetheless. I think we're going to see that taken to another level. Once the market realizes that it's more sort of quote unquote official, that the Fed is taking its foot off the gas, precious metals should actually do very nicely from that point forward.
Well, that's good news to hear. Now, in the midst of all of this is the inflation dragon. Will the Fed have slain the dragon?
I guess that depends on your definition of slaying. I think it'll have poked it, it'll have slashed it, but I think that may only annoy it for a little while, and it may back off a little bit. So we're at 9.1% for July. Sorry, for June. I guess we're expecting July numbers probably in about a week or so. And so that's a 41-year high. It's been rising up until it reached that point. So we can't even look back yet and say that, that looks like a peak, because we haven't seen it even back off. It's only risen since then. So oil prices have come down somewhat. That's a big contributing factor. A lot of the other inputs haven't really backed off. So, if I had to make a guess, we're probably going to see July numbers come in somewhat close to where they were for June. But no, I don't see the Fed slaying any inflation dragons anytime soon. I think that we're going to see persistently high numbers, even if they're not quite as high as we had for June. Over the sort of the second half of the year, I do think we're going to continue to see, in the high single digits for sure, for some time to come.
Yeah, sadly, I'm not disagreeing with you. I think a lot of our problems with inflation right now is cost inflation, which is being pushed by the higher energy costs. And although energy is taking a break right now, I'm not looking forward to this winter when things get cold and the energy prices go and start to take off again.
Exactly. And, there's the whole supply chain issue, which is really, as many argue, I think rightly, that's a big contributor to the inflation that we're facing. And that's not something that the Fed really has much, if any ability to affect. And so until that's really addressed, I don't think we're going to see any kind of relief from inflation.
No, I've always found that the Fed was somewhat limited in what they could do, and unfortunately, they've been playing, monkeying around with the system here since 2008, to the point where we really don't know what the repercussions of all this new policy is going to be in the long run. And my father always said, if you don't know what you're doing, don't do anything. And I liken that piece of wisdom, and I wish the Fed had listened to that in a lot of cases.
Yep, that is quite a wise statement. It sure is, and it's too bad they don't take it to heed.
No. So, in summary, then we're looking at some more Fed Fed increases, you feel that silver's bottomed out at about the $18 level. And when the Fed does its pivot, we should see silver and precious metal prices take off. And
I absolutely, yeah, that is my working scenario. Absolutely going forward.
that's a beautiful blue sky bit of optimism. And let's end that discussion on a positive note right there.
All
We'll
right.
pick it up again in a couple of months, and we'll see where the markets are and where we're heading from there.
Sounds great. Thanks so much, Mike.
Not a problem, Peter. Thank you for joining me.
It's been my pleasure as always.